Okay, let's do some journal entries related to the issuance of common stock and preferred stock. We're also going to prepare our statement of shareholders' equity, which is going to be part of this unit. Okay, so let's get started. We talked about three different kinds of stock. We talked about par value stock, we talked about no par value stock, and we talked about stated value stock. So we're going to do 4 transactions where we can capture kind of some of the different nuances of these. So in the first transaction, our company issues 30,000 shares of $10 par value common stock for $10 a share. So we're issuing it exactly at par and we're getting $300,000. So the journal entry is going to be a debit to cash because we got cash and we're going to get $300,000. Okay. Then we're going to credit common stock. We credit common stock for par value. Okay, so the credit to common stock is always at par value when we're issuing par value stock. So in this case, it is going to be the 300,000. Our debits equal our credits, and we are all done. Okay, now let's do a next example. The next example, the company issues 30,000 shares of $10 par value common stock, but this time they issue it for $12 a share. We're issuing above par value. So our journal entry, we're going to debit cash for the amount of cash we received. In this case, it's $360,000. We are going to credit common stock for par value, which is still $300,000. And we know our debits need to equal our credits, so we know we have another entry for $60,000. And that is going to be a credit to something that we call paid in capital in excess of par. All right, let's make this a little bigger so we can see that whole thing. Paid in capital in excess of par is basically where we track all the amounts we received when we issued par value stock for amounts above par value. In this case, we had $10 par value stock. We issued it for $12 a share. So we got $60,000 more than par. And we're going to put that in an account called paid in capital in excess of par. This account is also commonly called APIC, or additional paid in capital. And at some point fairly soon here, I'm going to switch from calling it paid in capital in excess of par to APIC, because most of us in the accounting profession, we're lazy, and instead of writing paid in capital in excess of par every time, we're just going to hit APIC. Also, if you look at your financial statements on the balance sheet in the equity section for your group project, you're more likely to see the word additional paid in capital or APIC rather than paid in capital in excess of par. Okay, if you take the CPA exam, call it paid in capital in excess of par. For the rest of you, APIC is fine. All right, so now we're going to issue 30,000 shares of no par value common stock for $12 a share. So once again, we're going to debit cash for $360,000 because that's what we actually received. If we do not have a par value, then the entire amount of cash received goes into the common stock account. Okay, if we have a par value, then we only credit common stock for par value. But if we don't have par value, then the entire credit to common stock is going to be for the amount we received. So common stock for $360,000. Okay, so you can see that our entries look like slightly different depending on whether we have a par value or no par value. Either way, we sold 30,000 shares for $360,000, but the entry looks different if we have a par value on our stock versus if we have no par value. The final entry, the company issues 30,000 shares of $10 stated value common stock for $12 a share. So Looks very similar to par value, right? We've got $10, but instead of a par value, it's a stated value. And we sold it for $12 a share. So still going to debit cash for $360,000 because that is the amount we received. We're going to credit common stock, and we are going to credit for the par value, or the stated value, sorry, the stated value times the number of shares we sold, which is 300,000. And our credit, second credit, is going to be paid in capital in excess of stated value. Gosh, I'm a terrible typist today. All right, so now instead of having paid in capital in excess of par, which is what we had when we sold for an amount greater than our par value, we have paid in capital in excess of stated value. Other than that, these entries look almost identical. And really, we're going to focus for the rest of the chapter, or for the rest of this unit, on par value stock. So you really, for exam purposes, probably only need to really focus on par value stock, but I want you to know how to do no par value stock, and stated value stock might be good little 1 or 2 points on an exam. Okay. Finally, we are going to create our statement of shareholders' equity. And our statement of shareholders' equity is going to basically tell us our total amount of equity. Equity has 2 parts to it. There is paid in capital, which is the money we received from issuing stock, and then retained earnings. Paid in capital always goes first. Retained earnings always goes last. So think of retained earnings as the caboose on a train. Woo, woo. It always comes last. Okay. So we're just going to list out here. We're going to start with our common stock, and we're going to use this entry, number 2, for our, oh, I don't see a way to highlight that. Can we add color? I don't know. So anyway, we're using number 2 here, okay? All right, so first we're going to list our common stock, and our value at our common stock account is 300,000 because that's what we booked up here. Then we're going to list our paid in capital in excess of par, which I'm just going to call APIC. And that we said was 60,000. All right. At this point, we don't have any other paid in capital, so we can bring out the caboose that tells us this train is almost done. And that caboose is retained earnings. And it tells me up here that my retained earnings is going to be 65,000. So 65,000. So then my total shareholders equity, I can just add these bad boys up. And my total shareholders equity is $425,000. Okay? I can do the little double underline under it. Let me see, where is it? Here we go. There we go. No, it didn't happen for me. Oh, here we go. All right. So our total shareholders equity is 425,000. All right, simple enough, hopefully. Let's go talk about preferred stock. So preferred stock is going to be very similar, except the verbiage will be a little different. So we're going to issue 50 shares of $100 par value, 5% cumulative preferred stock. This 5% cumulative, that is related to dividends. You don't need it when you're doing your journal entry when you issue the stock, okay? So when you issue stock and you're doing the journal entry, ignore the percentage and the cumulative or non-cumulative because it doesn't matter for the issuance of the stock, okay? All right, so we are going to debit cash, how much? $6,000 because that's what we actually received. All right, then we're going to credit preferred stock. And we're going to credit preferred stock for the number of shares times par value, 50 times 100, which is 5,000. Then we're going to credit paid in capital in excess of par dash preferred. And we're going to do that for the $100, which is the amount we received in excess of par. And again, we can just call this APIC if we want, or we'll call it APIC preferred. We are going to keep our APIC separate between common and preferred, just because we want to keep those separate. All right, so now I'm going to do my statement of shareholders' equity, and it says, use the statement we prepared in the common stock section, and then add the journal for the for stock above. So I'm going to go ahead and do that. I'm going to just copy this over, copy, paste. All right, so I know I issued common stock for 300,000, APIC, and because I know I'm going to be adding preferred here, so I'm just going to call it APIC common. Our retained earnings I know comes last because it is the caboose, so I'm going to insert 2 rows here, and I'm going to add the preferred stock we sold. So I sold preferred stock, and the amount in that account is $5,000. And then I have APIC preferred for 1,000. And that gives me, my retained earnings didn't change. And so that gives me total shareholders equity of 431,000. Okay. That is going to do it for our journal entries for issuing stock, both common and preferred stock. And I'll see you next time when I think we're talking about dividends. All right, see you then. Bye.